Hello, everyone, people. Hold on to your hats, because this visionary investor says Tesla is about to reach a jaw-dropping milestone just in time for the holidays. We're talking about Tesla's stock, possibly surging past the amazing $400 mark by Christmas. But how is this possible? How is it planned to work? And what does Cathie Wood see in Tesla that makes her make such big claims? It's interesting. I believe it has to do with facts. Autonomous taxi platforms are the biggest AI project in the world. We think Tesla is the best when it comes to returns. When it went up, it was about 150% compared to our other names, many of which hadn't moved. So we will all always recycle that way to make money. Also, I heard Elon on the last conference call, and he's very worried about the economy. I don't think we'll be talking about GM and Ford in 5 years. It's interesting that both of them are cutting back to make more money. Riem says they can't make money in this space unless they grow. That's how things work. We'll figure it out. Break down the facts and catch you up on the exciting new things that could make Tesla's stock soar to new heights. Hold on tight, because this is going to be an exciting Tesla journey. But first, show your support by liking this video, subscribing to Tesla Stock News, and click that notice button. Ring the bell while you're at it. Are you ready to start? First, let's talk about the important topic of self-driving taxi platforms. This is the biggest AI project in the world, and Tesla is clearly at the front. Recently, there was a shift in Tesla's position in the market, and the company is now ranked third in terms of our holdings. You may be wondering why we sold about 20 million shares. It's because Tesla experienced a shocking 150% surge compared to our other investments. In these situations, we always choose to take advantage of the profits. Also, on Elon's most recent conference call, he expressed concerns about the E. It's interesting that both companies seem to be cutting back because they can't make enough money in the EV space. This creates a tough catch-22 situation because their shareholders want traditional internal combustion engines and quick returns. To use Tesla's example, its competitors, on the other hand, we expect Tesla's market share to grow. Tesla is still one of the most innovative and controversial companies in the world. From its groundbreaking AI developments to its intriguing Cybertruck and record-breaking deliveries, the company is always in the news. Tesla's journey has been nothing but a roller coaster. Now let's look at the problems he is facing right now. These problems are mostly caused by limited production, which means that Tesla cars will likely be hard to find in the near future. The company wants to make between 200,000 and 250,000 units by the end of the decade. The original prediction was much lower, with only about 50,000 units expected to be made this year. This production limit is a major worry not only for Tesla, but also for investors who have faith in the company's growth direction. Tesla faces some challenges, but the big question is whether they can work around these problems and meet the growing demand for their innovative electric cars, especially those that cost less than $30,000. The price range below Rs. $30 million is a big deal in the electric car market, bringing the EVs closer to mainstream affordability and accessibility. However, reaching this goal depends on Tesla's ability to get rid of production bottlenecks and make its manufacturing processes more efficient. Investors are closely watching to see if Tesla can meet this important milestone by the due date. The Cybertruck is a cool and unique car that makes me think of sci-fi shows like Buck Rogers from the 1970s. However, its giga casting construction makes me wonder how much it would cost to fix dents. Despite this, reservations for the Cybertruck have risen to an impressive 750K to a million, which shows that there is a lot of demand in the big picture. Tesla's growth isn't slowing down, it's just changing in seconds and has an amazing range of up to 500 miles. It can also pull up to 14,000 pounds. It's important to deal with right now because you do have a vehicle that will be rare in terms of how many are made and how many actually come out. I think ultimately you'll get to 200,000 to 500,000, but by next year, you're really only looking at 50,000. Ideally, they'll start delivering on November 30, but this is an important RAM because investors need to be convinced that they will be able to make and deliver on new vehicles. Even though many people are saying that Tesla's overall story mirror, I don't agree. I think this is just a step towards the next part of the story. Now, let's look more closely at the interesting part of Tesla's new policy on the Cybertruck. which is different from the usual car owning experience. According to Tesla's recent statement, Cybertruck owners must promise not to sell or try to sell their vehicle within the first year after receiving it. This is a unique requirement that sets Cybertruck ownership apart. In contrast to traditional car ownership, which lets owners sell their cars whenever they want, this one-of-a-kind clause makes us wonder about Tesla's intentions and what it might mean for Cybertruck owners. Tesla's stance on Cybertrucks makes a notable exception. It shows that Tesla wants to keep some control over the early sales of these innovative electric cars. In addition, the policy spells out a serious punishment for those who don't follow this rule. If this rule is broken, or if Tesla has good reason to think that it has been broken, the company can go to court. Tesla may ask for legal relief, a court action that aims to stop the title of the truck from being transferred to a new owner. What really stands out about this policy is that Tesla can demand liquidated damages from owners who are found to be in violation. These damages could be very high, up to $50,000, or the equivalent value received from the sale or transfer of the Cybertruck, whichever is higher. This means that Cybertruck owners who plan to sell their vehicles within the first year face a big financial risk. The Cybertruck ownership experience is changed in a unique way by Tesla's new policy, one that combines parts of ownership with some limits that are meant to protect Tesla's interests, even if it makes potential buyers scratch their heads. It shows that Tesla is committed to shaping not only the vehicles themselves, but also the terms and conditions of ownership in the electric vehicle landscape. It remains to be seen how this policy will affect Cybertruck buyers and the broader EV market, and it is sure to spark discussion and debate in the automotive community. To make things easier, Cybertruck owners who need to sell their vehicle within the first year of delivery must notify Tesla in writing and give the company a reasonable opportunity to purchase the vehicle at its discretion. Tesla will buy the car at a price stated on their final price sheet, taking into account the car's low mileage of less than 25 cents per mile, normal wear and tear, and the cost of fixing it up to Tesla standards for a used car. It's important to note that people who don't follow these rules could lose access to Tesla cars in the future. Now let's talk about some business insights. Cathie Wood, CEO of ARK Invest, has said that she thinks Tesla is the biggest player in AI in the world. Based on her track record of spending in technology, this is a strong opinion. ARK Invest predicts that Tesla's revenue in 2027 will be an impressive $2,000 per share, a big jump from the current share price of about $235. This prediction may seem optimistic, but it fits with the potential of aid-driven services, especially in the form of robo-taxi revenue and the much-anticipated Tesla bot. Speaking of the Tesla bot, if Tesla's vision of a full-fledged robo-taxi fleet and the sale of 1 million robots by 2030 comes true, it could have a big effect on Tesla's stock price, possibly going above $1,500 per share. Dave Lee, a Tesla fanatic, offers a bullish valuation model. According to Lee, Tesla will be worth a lot more if it can make an $800 billion gross profit from production limits and make electric cars more affordable. Please share your thoughts and ideas in the comments section below. If you enjoyed reading this and found it useful, don't forget to hit the like button and subscribe to Tesla Stock News to get more news about what's happening in the world of Tesla. Thanks for watching, and we'll see you in the next video.